Hello traders, this is John Kicklighter, Chief Strategist for DailyFX.com, here with a Forex strategy video in which we will discuss a very common currency, the Japanese yen, but I want to look at a factor that we don't often cover for this particular pair, although it is constantly in the back of our minds. Now we talk about the yen crosses, and synonymous with this currency and these pairs is a concern about risk appetite trends. Of course, this is one of the most market-moving components of how it does perform. However, there is a backdrop constant buzzing, a bullish buzzing at that, that keeps the yen crosses buoyant, everything else being equal. Now, this buoyancy may turn to outright bullishness in the foreseeable future, and this is why I think we need to incorporate this and put it into context of timing. Now, we'll start off our conversation with the dollar yen. The dollar yen is a fantastic assessment of this particular fundamental theme because it strips out more of the risk on, risk off theme. Now, when we think of a pair that is more carry prone, like the Aussie yen, we can always reference back to its relationship to risk trends. All right, like we have here with the Nikkei 225. If we were looking at the Nikkei 225 and we were looking at the performance of the Aussie yen, the two have a pretty tight correlation. We can make the fundamental link relatively easily. When we're looking for a risky asset in the capital market world, we go to equities. In this instance, we have Japanese equities. When we are looking for risk in the FX world, we go to something that has a higher carry or a higher yield. And that's something like the Aussie yen. You could also say the Kiwi yen or the CAD yen as well. Now, we can also say look at this in terms of the actual carry itself. All right, here's the Aussie yen versus the Deutsche Bank Carry Trade Index. All right, risk on or carry, they are one and the same, and we can look at most of the currency pairs out there, including the European currency-based yen crosses like the Euro yen, the Pound yen, and the Swiss yen. All right, risk trends in carry, guided by pretty much the same influence. All right, appetite for yield versus a non-essential drive towards risk aversion. The dollar yen follows similar patterns. All right, it does have an influence to risk trends, just like all the others. But there is another factor that is folded into this picture that I think is best illustrated by the dollar yen. And it's better illustrated by this because it's two safe haven currencies, gets us a little bit further away from that risk theme and that carry theme. The factor I'm thinking of and that I'm referencing is stimulus. All right, the Bank of Japan stimulus versus the U.S. stimulus. This is actually the dollar yen versus the Bank of Japan's balance sheet. All right, that balance sheet has increased substantially since last April, when the Bank of Japan introduced an incredible stimulus program, one that on a percentage of GDP basis is actually larger than the United States. Now, it's not larger notionally, but as a percentage of GDP, comparing apples to apples, it is larger. All right. That stimulus program, and for most of us, we know that as stimulus increases, we're pumping capital, we're pumping more of that currency into the system, and that actually has a negative impact on the currency itself because there's more of it out there, more of the traditional supply and demand factor of a currency. All right, so as the stimulus jumps, the value of the yen depreciates. And this is a very interesting pair as well because we're talking very much about a Fed balance sheet versus a BOJ balance sheet, and that comparison is a very notable one. But my interests lie in the outlook. The outlook for the Fed is not for an increase to the balance sheet. Rather, the speculation now is for that balance sheet to actually level off and then stabilize completely, for the eventual downshift. All right, that's the discussion that we have with the taper. Obviously a big theme this week with the Fed rate decision, not necessarily giving us a news of a taper, but shaping speculation for when that taper will occur. This opens us back up for what we're going to be looking at from the Bank of Japan side. The Bank of Japan is likely and expected to increase its stimulus program sometime in the next 6 or so months. Why? Because in April, we're going to get a tax hike, all right, a substantial tax hike for consumption spending. That is going to be matched by a mild stimulus program to try to offset the negative implications of a tax increase, but it is more likely that the Bank of Japan comes in behind them and offers a stimulus program as well to redouble the efforts to support growth. Now, obviously, as this stimulus program increases, we expect to have a similar situation from the yen crosses. The yen will get another drop. But we don't have to wait all the way until April before this is realized in the market. Take a look at the dollar yen. These highlighted periods here separate two specific times. This is the time frame for which we started to see the yen crosses really take lower. Now this is highlighted obviously on the dollar yen, but this was a move that was experienced across all the yen crosses. An incredible depreciation of the Japanese yen. This transition right here, what is that? April 4th, 2013. That's when the Bank of Japan actually announced its stimulus program. Right? That's when it actually put into motion that program. All of this, speculation in the lead up. The actual follow-through on the confirmation was a fraction of the move that we had in the speculative lead up. Note the time frames. April was when it was introduced. Next April is the time frame that the market is working with on the next program, the increase to the program to try to help offset any kind of negative growth implications from global slowdown and the sales tax situation. And we are just around October. Very close to the same time frame. Very, very close. All right? In fact, it looks like a mirror image. The question is, will we get a mirror image from the dollar yen? Will we get the same resolution to congestion? That was very tight congestion down here at record lows before we get a massive breakout. So will this wedge end in a break above 100? This is a very important, very dominant fundamental theme. The problem is that we are competing for fundamental themes. Yes, this stimulus program, if it is realized and is speculation built into it, will be quite substantial. It will have a very influential impact on the yen crosses. However, compared to where we were last year, we were at record lows last year. We are not at record lows now. We are substantially off of those record lows. All right? There isn't that pent-up pressure to find follow-through. Furthermore, speculative increase in stimulus is something that we have already seen the influences of. We've already seen the impact it can have. And of course, there are certainly wide variabilities to how this will all come into fruition and how it will play through and whether it will give full inflation and growth expectations. But it's far less ambiguous now than it was back then. So you're less likely to get as remarkable a yen depreciation. Furthermore, and this is the more important part in the short term, we have something that is more immediate and certainly a greater competition for the market's attention. All right, that is risk trends. Now we can see it illustrated pretty well in the Nikkei 225 and the relationship we have here with the dollar yen. We are, after a significant buildup, forming a nice triangle or a nice wedge pattern. Yes, you can certainly get follow through on the Nikkei 225. It certainly has open room ahead. But when we look at the global ranks of risk trends, I think it's better to actually look at the U.S. equity-based indexes because they often lead the march. That being said, we know that this is at a record high on an incredible rally that we have seen from the first quarter 2009 buildup. All right. So if risk trends starts to take a drop lower, we are going to offset those possible speculative implications of a new stimulus program from the Bank of Japan, because it's not as uncertain, not as remarkable as it was last year. But in the absence of a very strict risk aversion theme, that threat is minimized, there will be a slow rumbling, a quiet rumbling beneath the market that tries and attempts to depreciate the Japanese yen because of this impending expectation of fundamentals. Okay, so this is a very significant fundamental theme, and a lot of people bring this up, and as you should, this should be in the back of your head when you're looking at any yen cross, including the dollar yen. But do remember that there are multiple fundamental themes out there, and we have to play the one that holds the greatest prominence over the market. We have to follow, in other words, what the market is following, because that's where it moves. All right? So keep that bigger fundamental theme in mind, but watch this dollar yen closely. And if we start to see a breakdown below 97, don't immediately be skeptical of its prominence. It can actually find a considerable amount of follow-through, because in the meantime, in the short-term future, we can have a greater predilection for risk trends than we do for stimulus expectations, which are further in the future. All right. Good luck trading out there, guys. We'll do another Forex strategy video tomorrow.